CoreLogic reported that home prices fell 0.1% in December and are now up 5.5% year over year. CoreLogic reported that home prices will fall 0.2% in January and will rise by 2.8% over the next 12 months, which is an increase from the 2.5% in the previous report. It's also worth noting that they have historically been very conservative. For example, CoreLogic originally forecast that they would see a 3% appreciation in 2023. Meanwhile, we saw 5.5% appreciation. And going back to 2021, they forecasted home prices would actually decline 6.6%. Meanwhile, we saw 19% appreciation. Now, Black Knight released their reports for November and December showing that home values rose 0.1% in each of those months. Black Knight is showing that home values rose 5.6% year over year. Supply and demand is continuing to be the driving force for the strength in home values. In the month of January, we had approximately 2.2 months of supply for all property classes in the entire Chicagoland area. This is well below the 4.6 months supply needed in a normal market. We should expect an increase in supply with the start of the new spring market next week. This will be good considering that we've already seen an increase in demand with lower rates and people getting a head start with this buying season about to begin. Now, as for mortgages and inflation, over the weekend, the Fed Chair Powell was interviewed by 60 Minutes, and while he didn't say anything new, he reiterated that there will be no early interest rate cuts in March and hinted that any initial move will have to wait until the middle of the year and be contingent on the Fed having more confidence that inflation is heading substantially towards the 2% target. Here's something interesting. Black Knight reported that people have a lot of equity in their home, on average $300,000. That's tappable equity of around $240,000. They also said that the combined loan to value that people have on average for mortgage holders is 46%. So there's a ton of equity that you can do things with, like debt consolidation, purchase vacation home, or investment property. The MBA released their mortgage application data for last week, showing that purchases fell 1% last week and are down 19% year over year. Interest rates remained in the mid to high sixes, roughly 0.5% higher than this time last year. The official spring market starts next week, right after the Super Bowl. If this is the year, let's be prepared. Call, DM me, or email me with any questions that you might have.